Hi, Cary here with TriStar Home Loans, and thanks for joining me again for another of my videos. Today I'm going to be talking about appraisals and how they influence the mortgage loan process. But before we get started, remember you can follow me on my Instagram page. You can also follow me on our TriStar Home Loans Facebook page. So let's get started and talk about appraisals. All right, so let's talk about appraisals. The value of your home is a huge factor when a lender is deciding how much to lend to you, right? So on a purchase, let's use that for example. If you're buying a home for $400,000 and it's on contract for $400,000, the bank is not going to just trust that that house is worth $400,000. The bank is going to utilize a third-party appraiser to tell them how much this house is worth. And there are times those don't always match. So in a purchase world, the lender is going to use the lower of those two numbers. They're going to use the lower of the sales price or the lower of the appraised value. So that appraised value holds a lot of weight in how much that lender is going to allow you to borrow. Sometimes, in fact, many times that will factor in on your interest rate, that will factor in on your down payment and what down payments are required on a purchase loan. On a refinance, the value is really important for a very similar reason, is that the bank needs to know how much the home is valued at so they can determine what percentage they can lend to you in a loan amount. So again, appraised value is a truly important factor on determining the lending guidelines, what lenders will allow you to borrow. And now let's talk about the structure of an appraisal. Appraisers are done by third-party appraisers that we do not have direct contact with. That rule changed in 2010, so we no longer are in direct contact with appraisers. I can't call an appraiser and say, hey, we need this value, what do you think? Those are ordered by appraisal management companies and panels of appraisers that they choose from in order to go out and appraise the home. And this is the process they typically go through when determining an appraisal on a comparable analysis. So they're going to use three major analyses when they're coming up with the value of a home. One is going to be the proximity. So you're looking at comparable properties that are within a mile of your subject property, the one that you're getting appraised. So typically within a mile. However, the closer you are to the subject property for a comparable, the better. That's going to hold the most weight. So a neighbor that is exactly like the subject property is going to hold more weight than a house that's a mile away that's like the subject property. Okay, so that's proximity. The other one is going to be likeness. When I say likeness, is that you want to be comparing similar properties. So a 3-bedroom, 2-bathroom home, we shouldn't be using comparables, or the appraiser shouldn't be using comparable properties to determine value that would be maybe a 5-bedroom, 4-bath. You don't typically want to do that. You want to stay like the subject property or within reason, and they have criteria to do that, appraisers. The last criteria would be time. When I say time, is that we want to use comparable properties to determine value that have sold within the last 90 days if you can, if appraisers can. They're looking for comparables, or what we call comps, that have closed in the last 90 days. Sometimes they'll stretch those out. If they can't find enough comparable properties in the last 90 days, they can stretch it out to 120 days, sometimes a little bit longer. But again, it's likeness, it's proximity, and it's time. Those are the three main elements that an appraiser will use to collect comparable properties in order to do some formulas and come up with a value of the subject property. All right, so appraised value is a huge factor when lenders are determining how you can be approved, what your rate is, what your down payment options are, and those things. Great news is that we're getting appraisal waivers on a lot of loans right now. Somebody that may be in the system, meaning they may have refinanced in the last 4 or 5 years, and their data from the property is already in maybe Fannie Mae and Freddie Mac's system. A lot of times we're running those automated approvals that come back and allow us to waive the appraisal. That means no appraisal fee, no appraiser coming out to your home, and we try as hard as we can to get you appraisal waivers, and we're getting that done probably half the time right now. So just wanted to let you know a little bit more about appraisals and how much they factor in on our loan process. Really important. And so that's all we got for today on appraisals. Thanks for watching. Hope you watch this video, and you hope you watch some of our others that are showing up on YouTube. And until next time, this is Cary McCaslin at TriStar Home Loans. Take the time if you can to watch us on Instagram or follow us on Instagram and check out our Facebook page as well. Take care.